What's the difference between Bitcoin and Ethereum? Which one should you invest in? Let's get it. Welcome to our channel, the #1 place for crypto education. And here, we explain topics of the cryptocurrency world using analogies, stories, and examples so that you can easily understand them. In this video, we are going to explain the difference between Bitcoin and Ethereum. First off, let me ask you this question. Have you ever been at a grocery store and wanted to pay with cash, but they were out of coins? Or maybe you didn't have any coins to put into the parking meter. In this case, you would want some sort of token that is of value. Well, this is kind of like the difference between Bitcoin and Ethereum. They both serve the same purpose, which is to be a form of currency. But over time, they have grown to have more purposes than just being a currency. Let's first start off with Bitcoin. So Bitcoin is the OG, or the original cryptocurrency. It was the first of its kind, created by an unknown person, or a group of people called Satoshi Nakamoto, in 2008 during the height of the Great Recession. Bitcoin was created to be peer-to-peer, meaning person-to-person, electronic cash. It was created to make it so that we could exchange money without having to go through a third party like a bank. Now, when Bitcoin first started, there was no minimum or maximum amount. You could mine it for free using your computer. And then eventually people realized that they could actually make a lot of money mining it. This led to people buying up all of the ASIC miners, which are machines used to mine Bitcoins, and then renting them out to other people for a fee. This caused the cost of mining to increase, and therefore the cost of creating new Bitcoins increased as well. This means that if you want to become a miner today, you need to buy an ASIC miner, which costs tens of thousands of dollars, and then you need to pay for electricity to run those machines. So unless you're getting paid to run those machines, you're losing money every day that you're running them. But back to the topic at hand, Bitcoin is a capped supply asset, meaning that there will only ever be 21 million Bitcoins. Another thing about Bitcoin is that it uses the proof of work consensus mechanism. If you don't know what consensus mechanisms are, you can watch our video on how blockchains work. But essentially it works like this. If you want to start a new block in the blockchain, you need to race against other people to see who can get the answer to a really hard math equation first. The first person to figure out the answer gets to add their block to the blockchain, and they get rewarded with Bitcoin. For Bitcoin, the difficulty of the math equation gets harder and harder over time, which means you need to use a more powerful computer as time goes on. So now let's move on to Ethereum. Ethereum was created by a programmer named Vitalik Buterin when he was only 19 years old. The idea behind Ethereum was to create a decentralized software platform that allowed developers to create applications that run on the blockchain. In fact, Vitalik wanted to create something even bigger than Bitcoin. He wanted to create something that could potentially disrupt overfed institution. Now you may be asking yourself, what does overfed mean? Well, overfed stands for organizations, research and education, charity and nonprofit endeavors, government, corporations, and finance. These are the things that Ethereum aims to disrupt. When Vitalik first created Ethereum, he wanted it to be a way that we could do smart contracts. A smart contract is essentially a way two people can agree to transact with each other. For example, let's say you're a farmer, and I'm a juice company. We can create a smart contract that says if you bring me 100 apples, I will give you $10. Now once you bring me the apples, the smart contract will give you the $10. This is great because if you think about it in the real world, if you were to go and try and strike a deal with me, you would need a lawyer to draw up the papers, and then you would need to sign them, and then you would need to have somebody oversee the contract to make sure that both parties are holding up their end of the bargain. With Ethereum, you don't need any of that. You can just create the smart contract and then it runs automatically. Another thing about Ethereum is that it has a much larger maximum supply. It has a max supply of 120 million ETH. And finally, Ethereum uses a proof of stake consensus mechanism. If you want to learn more about how proof of stake works, you can check out our video on how blockchains work. But essentially, it works like this. If you want to start a new block in the Ethereum blockchain, you must already own some Ethereum. Then after the block is created, you get rewarded with more Ethereum. Okay, so let's recap. Bitcoin was created as a form of digital cash, and it uses a proof of work consensus mechanism. On the other hand, Ethereum was created to be a platform to run decentralized applications, and it uses a proof-of-stake consensus mechanism. Now let's talk about scalability. So scalability refers to how many transactions a blockchain can process per second. Bitcoin can only do around 5 transactions per second. On the other hand, Ethereum can do around 15 to 30 transactions per second. However, there is a big project in the works for Ethereum called EIP 1559, which is supposed to greatly increase the number of transactions that Ethereum can do per second. So, now let's talk about how much money you would have made if you invested in either of these cryptos. So when Bitcoin first came out, you could have gotten 10,000 of them for $50. Today, one Bitcoin is worth over $40,000. That means if you bought 10,000 Bitcoins when they were $50, you would now have $400 million. Now, if you bought 10,000 ETH when it was $300, you would now have $3 million. So although you would have made way more money investing in Bitcoin, investing in Ethereum isn't bad either. The last thing we want to talk about is which one is a better store of value. To answer this question, we need to look at the price chart of both of these assets. Here is the price chart for Bitcoin and Ethereum. As you can see, they both had similar price action from 2017 to 2019. However, since then, Ethereum has begun to diverge from Bitcoin and is starting to find its own path. This could mean that Ethereum may be a little more volatile than Bitcoin, but it could also mean that Ethereum is becoming its own thing and not just a copycat of Bitcoin. So which one should you invest in? One thing you need to remember is that both of these assets are extremely volatile, especially in the short term. You never know what could happen, and you could lose all of your money just as fast as you could make it. So before you decide to invest in anything, you should always do your own research. However, if you're looking for my opinion, I believe that the best strategy is to dollar cost average into both of them. Dollar cost averaging is when you break up your investment into smaller chunks and then you invest that chunk at regular intervals. This allows you to buy more of an asset when it is low and less of it when it's high, so you can't time the market. By doing this, you'll always make money in the long run. So let's just say you have $1,000 to invest, and you're going to invest that $1,000 into both Ethereum and Bitcoin. You would take that $1,000 and divide it up into 20 chunks, or 20 weeks. So every week you would invest $50 into Bitcoin and $50 into Ethereum. This way, if the price is high when you're trying to invest, you're only investing $50. And if the price is low, you're still investing $50. Now another strategy is to buy the dip. This is when you see a big drop in price and you invest a large sum of money. The problem with this strategy is that you need to be able to predict where the bottom is. If you don't, you could be left holding the bag, and you could lose a lot of money. A fun fact about Bitcoin is that the person or persons who created it actually mined the first Bitcoins. Mining is when you use your computer to help run the network and validate transactions. When you do this, you get rewarded with cryptocurrency. A fun fact about Ethereum is that the creator Vitalik once burned 500 ETH when he was 19 years old. He literally set his money on fire. He did this because he wanted to prove a point that if you have an idea and you're passionate about it, you shouldn't be afraid to go all in on it. By the way, if you're still watching this video, comment down below if you got value, and we will try to respond to as many comments as we can. Also, here's your reminder to smash that like button and subscribe. Thanks for watching, and we hope you've learned something new. We really hope that we've earned your subscription, so go ahead and click that subscribe button. If you want to learn more about how the blockchain works, we recommend checking out our video on how blockchains work.